Okay, it's Saturday afternoon. I wanted to go over some of the things I talked about in the podcast from last night. I'll go real quickly because I don't want to be boring here. But it really has occurred to me that if we look at the numbers that are coming out of the government, whether they're the M numbers for money supply, Fed data, whether we're looking at the unemployment rate or the inflation rates, really none of that data is reliable. It's all distorted. It all gets amended later. And it's really become very arcane. I don't think the average person can really work with those numbers any longer. What we can do is we can look at what some of the markets are doing. And for example, we're going to go, I know I look at this all the time, but I think it's really important to use the UUP, which is the PowerShares Dollar Index, as an indicator for what's happening with our currency. Because this is the moving elevator that we all live in. We think gold's going up. We think the stock market's going up. We think certain things are happening, but it's all in the context of the fundamental underlying value of our dollar. So here we have the long-term uptrend from late 2009, right there. We have the down channel from this high at late in early June. It made a recovery. It's down again, a little bit of an Elliott wave thing. I talked about that, but the problem is, where's this bottom? That's the big thing. You notice this time in here, these indicators are well below. They're very, very low, and we had a long-term slide. Little bouncing recovery, and now we're back sliding. Look at the decline. I think this is what's going to drive everything, and what I think it's going to do is make the stock market very hard to predict, because even though we're at very high PEs of about 22 across the market average for the S&P, I believe it is. That's high, historically speaking. But I think I would love to tell you it's going to correct, because I would love to have the buying opportunity. But I'm just not seeing that with such a weak dollar. Now they can split apart from each other, but I don't know. I'd love to know if there's somebody out there who's smart enough with spreadsheets to do a normalization where the dollar activity here could all be flattened to zero, statistically speaking, and then subtract that from the other indicators and see where those things are going. Because if you look at this S&P, it does look like a shoulder, head and shoulder, but we're in this little up channel. It's undeniably an up channel. We could see a break to the upside, which would be very bullish. We could see it cycle back down without it really being that bearish. I mean, that would just be a normal cycle move in this bull market climb we're doing. So, and I'm wanting to be bearish, but I'm just not seeing it totally in the numbers. But yet, with all the things that are going on in the economy, it's very, very hard to be a committed bull in this situation. And I think, once again, just we'll sum up with silver. We'll skip gold, but we'll look at silver. Here's this silver rocket run. Here's the stochastic. It's an indicator. Look how long this has been high. Should it correct? Yeah. Will it correct? Don't know. Not with the dollar going down like this. And where the bottom is for the dollar really is the magic question. And I think it's pretty much driving everything. It's very hard to get a business-like assessment of everything else while these things are going on. So that's it. I'm done. If you want to try and run those statistics, give me a shout, and I'll give you my opinion on what we should normalize. But I'm not smart enough with a spreadsheet to do it. Talk to y'all later. Bye.